let's look at Shopify. The company is categorized accordingly. I have put it as e-commerce, not a huge surprise here. You can see that from the 52-week close, e-commerce is quite dramatically outperforming the S&P 500. If we go to e-commerce, these are the stocks here that I am following. Here is Shopify. So it is an e-commerce platform. Very, very strong performance. Actually one of the strongest in this entire list. King of the hill being Wayfair. Okay, so this is the investor relations page. Making e-commerce better for everyone. We help people achieve independence by making it easier to start, run, and grow a business, e-commerce business. We believe the future of e-commerce has many voices, not fewer. So we're reducing the barriers to business ownership to make e-commerce better for everyone. Well, it is also brick and mortar commerce also can benefit from Shopify. Though the core of Shopify is certainly that you can go to their website and very easily make a high performance e-commerce store. So you can select a theme and within a relatively quick time be up and running. Because making a website by yourself, especially e-commerce, it can be a huge hassle. And if you look at the pricing here, $29 a month, that's very inexpensive. That's very inexpensive. And you get a lot of stuff for that price. Okay. Let's jump into, well, let's look quickly at the seasonality of the stock. Okay, SHOP is the ticker. We are currently in June. Interestingly, June is one of the weakest months for Shopify. On the other hand, we do see that July and August and this period is characteristically strong. 80% of the months, the stock closed higher than it opened. And here's the most recent data. Still, June is a weak month. It just is. That is the facts on the table. Let's look a bit at the charts. I am using stock charts. I am migrating a bit over there. It is a very professional platform. I like that. This is more long-term analysis. Weekly data points, we go all the way back here to 2016. So the performance is very impressive. Huge move. Let's be perfectly clear. The bulls are definitively in favor of Shopify. They are in total control, except arguably we have gone a bit too far. The RSI here was weaker than it was here, so there is some bearish divergence here on the RSI. That's something to keep our eye on. Let's look at some other indicators. So let's maybe some trend trading. Well, maybe some strategies. So let's look at momentum. That's quite relevant. Daily data points. Okay, you can see here at the on the PPO there's been some weakening. Okay, and we were bounced up into the upper Bollinger Band, then we pulled back to the 20-point moving average here, you can see. The thing is that, okay, long term, I am certainly bullish on Shopify. It's a fantastic business. They solve a problem in a very easy, efficient way. E-commerce is the future, okay. However, that does not mean that you always are going to be like bullish. There will be some temporary short-term bearish opportunities. I do think that you have a higher probability of success if you are bearish on Shopify for maybe the coming months or something like that. The coming month, that is, not months, meaning short term, simply because it is too elevated, way too elevated, and when we have had corrections in the past, they have been substantial. This is a big mover. Big moves up, big move down. Let's look at money flow. Maybe they will tell us a more detailed message. Okay. Well, the accumulation distribution line is very bullish. It just is. The chunk in money flow, we're not seeing much deterioration yet. Okay, let's look at relative strength. I mean, let's perfectly be clear here. Shopify is dramatically outperforming the S&P mid-cap and the small caps. Within this time period, the Shopify is outperforming the S&P 500 with 280%. That is outperformance. Maybe we should look at some other analysis. Let's do trend analysis. That can be interesting. So here you have the purple 20-day moving average. We do have support here. That's nice to see. So long term, I'm bullish, but I do think for the coming month, I wouldn't be surprised if we did see a correction in Shopify. Okay, so let's look a bit at some fundamentals. You can see here that the price to sales, price to book, the forward PE, I mean, it's a bit excessive. I mean, this is quite excessive, okay? Very excessive. And if you look at the analysts' recommendations, they are at 2.5, which is a bit more modest if you look at the analyst price targets. So the price target is $512. Shopify is currently at $766, okay? The difference between the current price and the analyst price target is minus 33%. That corroborates the notion that maybe there's a significant probability of a correction in Shopify. Maybe we are very due a correction. Let's go to Saks. Saks, they have a number 3 hold on Shopify. F value score, no value, forget about it. F growth, which is not good. A momentum. Okay, there's no dividend whatsoever in the Shopify stock, hence you do not have that incentive to hold Shopify. Okay. So, to quickly sum up, long term, I am definitively bullish on Shopify. Let's be clear. However, there is reason to think that there could be some pullback in the not too distant future. There's seasonality, not that good for June. It's one of the weakest months. The fundamentals have gone ballistic, I mean, because of the price. So there's a massive divergence between the actual fundamentals and the actual price. Okay, that's just the situation here today. Let's have a bit of a history segment on e-commerce, okay? Just to sort of get to know the bigger picture. So this is the early history. So in 1991, that's when internet became available for commercial use. Hence this entire industry, it is new, it is still relatively new. In 1994, Amazon.com was founded by Jeff Bezos. The interesting thing is that it was first actually called Cadabra.com, but some people told Jeff that it sounded like it could be mispronounced as cadaver.com, and cadaver.com sounds like some dark web website. Hence, he changed the name. Amazon is a bit of a... if you really think deeply about it, Amazon is a bit of a problematic name, because it started as an online bookstore. Books are made out of wood from trees, so when you really think about it in that way, that it's called Amazon, books are made out of trees, there's something, it doesn't kind of work, but it's stuck, and Amazon is doing a lot more than books nowadays. But yeah, not really good at picking company names. Bad company name, and really kind of a bad company as well, though it now works. 1994, Dell.com starts to sell PCs online. So now we are moving into an era in which more and more stuff is being sold online. 1995, eBay, founded by Pierre Omidyar. Then in 1999, Alibaba.com is founded by Jack Ma, and no surprise, he was inspired by Jeff Bezos. Going back to the list, you can here see that all kinds of stuff are now sold online. Rumble they are selling vehicles. Carvana they are selling used cars. Huge move, by the way, actually outperforming Shopify. Hence, e-commerce, anything can be sold online. The trend is in favor of e-commerce. I think that, it's very hard to think of stuff that cannot be sold online. Something that I do think will happen soon, it has kind of happened, but not that dramatically yet, and that is augmented reality. So if you do have an app, and with augmented reality features, then you can buy, furniture through the app. You can literally see how it would look in your home, and then click order, and then it will come to your home. Everything is going online. Even going to the doctor, that has become a more of an online thing. Yes, it is the future, it is the present. Let the trend be your friend, of course. That's always the case. Let's now look at the S&P 500 as we are wont to do. The SPY. Let's use this trend analysis. Okay. No surprise, another bullish day for the S&P 500. It just do not want to go to sleep. There are some theories that we will go all the way back and fill this gap, because there's a notion that gaps want to be filled. But let's be perfectly clear, I've said this many times, it makes no sense to me that the longest bull market will be followed by the shortest bear market. That makes no sense. There are many reasons to be bearish about the current economy. We have the virus situation, we have with total lockdown, we had issues in the debt market. There was a lot of pandemonium, a lot of issues with liquidity, and we now have major riots. That is not reflected in the current price. It just is not. Hence, be very careful, be diversified, let the trend be your friend, and have a good day.